I'm Greg Greenberg from the street, and I'm here with Mihir Dange at the NYMEX. We're going to be talking about gold. Mihir, gold is back below $1,300 an ounce. Didn't get any follow-through from last Friday's less than stellar jobs number. So what do you do with it from here?
On Friday, we saw gold down 20, and with the less than stellar jobs report, we rallied back to unchanged. I was hoping to see some follow-through there. We haven't seen it. I think that's not boding well for gold right now. But the problem is that there's very light volume, the liquidity is very, very light. So anybody can push it one way or another. But there's really not that much interest because Europe's on vacation. So I think what we're looking at right now is technicals. It's below 1301. It's a very, very strong pivot point. My next pivot point is 1275. I think below 1275, I think you could see 1225 gold. Above 1325, I'm looking for 1375 gold. We've been trending in this area now for 3-4 weeks. Usually it means for consolidation higher, but like you said, we're below 1300. I think it's important that we look at these pivot points of 1275 and 1325. It will be the driver for the next $50.
So if a less than stellar jobs number doesn't get gold going, what would the catalyst be that would, especially in a dormant light summer trading mode?
I mean, if somebody wants to liquidate or somebody wants to get involved into the market, it will be costly right now because the volume is thin, the volume is light. So if somebody wants to generate a position, it will drive the market one way or another. But you have the yen, the dollar, they're kind of constant. The bonds have been kind of just hanging right there. So I think we are in that summer mode. And if something ticks one way or another, it will drive the market.
So finally, since you guys are kind of bored on the floor, it sounds like, here's something else to think about. Morgan Stanley is shopping its commodities business. Clearly, there's regulatory pressure on the commodities businesses at Goldman Sachs and JP Morgan. What does this mean for you guys potentially?
I mean, it's really tough to say which way it could go, but I'll give you both sides of the coin. I think the one side is that they sell the business to somebody, they take over the business, it's kind of a non-event. Somebody else is kind of controlling the books and saying, okay, let's keep things status quo. I think the other option is they liquidate part of the business, and if they do that, I think you'll see possible liquidation in whatever positions they have. So let's say they're getting rid of their crude desk and saying, we can't find a good buyer for this. We have equity in it. Let's liquidate that position. You might see crude prices, either skyrocket, or maybe they have a long position and they're liquidating. So it could, especially at this time of year, put a lot of pressure or drive the markets, one way or another, which would drive a lot of other markets because they kind of move in tandem. So I would imagine that the odds-on bet is that it'll probably do nothing to the business, but it also depends at the time of sale, what the terms of the agreement are.
At the very least, it could liven things up down here.
Oh, yeah, absolutely.
Thanks a lot, and thank you for watching The Street.